guys, how's everyone feeling? Bit of energy? I want to do something different. Sorry, I didn't pre-discuss this, but let's see if there's some energy in the room. One of my dear teammates is celebrating her birthday today. It's a big number. I can't say the number because you're not allowed to tell the number. Bini, can you please stand up? This is a full group. Can we get some energy and say happy birthday? That's it, that's it. Thanks, guys. Sorry, I didn't chat about it.
Hello everyone, thank you a lot for joining. I will try with our wonderful community to heat it up just before lunch, because usually it's always complicated. The point of interest today, we are very, very lucky because we have really experienced people in the club specialized in stablecoin, which is one of the hot topics over the past year at least. Great moment, people keep speaking about volatility, bye-bye, well Lambo, well moon. Not the case today. Congratulations, we're creating value. So please, the first thing we want to do today is to present every single person. Ewoud, would you please introduce yourself?
Yeah, and bye-bye moon with the stablecoin, that's quite a challenge. But let's not forget we're talking about payments also today. Pleasure to meet you. Thanks for everyone joining. Thanks for some of the people that specifically come for this panel, so thanks. Yeah, my name is Ewoud Barink. I work for Worldpay. Don't know if everyone has seen this. There's some news around Worldpay being spun off of the organization FIS. Closer? Okay, like this. What do? We are a payment company, and we are a payment company that is offering services when it comes to fiat on and off ramping for a lot of different industries, but we focus primarily on crypto. What do I want to talk about today is what is next in payments, and for us, next in payments is crypto payments, and we'll have a chat on it.
Okay, Albrecht?
Yeah, hello everybody, I'm Albrecht, I'm the founder and CEO of Bitbond. At Bitbond, we're a software infrastructure provider, so we're not a stablecoin issuer or a payment company ourselves. However, we provide tokenization software to banks or to payment companies that want to issue their own stablecoins, digital dollars, digital euros. And for us, stablecoins are mainly a purpose to settle institutional securities transactions, for example. So remittances and payments are definitely one very big use case of stablecoins. What I am most familiar with and what I'm looking forward to talking about today is how you can settle transactions like bonds, stocks, fund shares on-chain, where the payment method is also an on-chain asset. And I'm very much looking forward to that.
Amazing, thank you Albrecht. We also are lucky to have Teana tonight.
Hi, I'm Teana Baker-Taylor. I'm the Vice President of Policy for Circle. Circle, in addition to being also a financial markets infrastructure company, is the sole issuer of USDC and of Eurocoin, which was launched last June.
Congratulations. And last but not least, we have Avishkar. Please introduce yourself.
Thanks, mate. Hi, everyone. My name's Ash. I lead crypto partnerships globally at checkout.com. Similar to Ewoud, we are a payments company, so we help fiat money come into the crypto ecosystem and come out. And as Teana mentioned as well, we're a stablecoin issuer of USDC. So I'm really excited about talking about the use cases, why, what's happening, who's doing what, and what we're solving for. And as Ewoud touched on as well, let's talk about the future of payments. Let's see where this is going to take us in the current climate.
Excellent. The first point actually is that people keep speaking about Bitcoin, sometimes Ethereum when you're lucky, and finished. The big point is that over the past 4 to 5 years, there's been a great expansion over stablecoins. Just to name a few, USDT, 90 billion traded daily. So maybe Teana, you can introduce to us today what is the current state of stablecoins. What are your thoughts?
Sure. So I think the first thing to acknowledge is that the term stablecoin is terrible. We should stop saying it. It infers that a lot of different types of assets are similar, and I think the last year has shown us that not all stablecoins are indeed created equal. Circle is a stablecoin issuer that issues a fully reserved 100% backed one-to-one stablecoins. So if USDC, they're backed by dollars. If Eurocoin, backed by euros. The actual assets sit in the bank They aren't lent, they aren't spent, they aren't used to pay Circle's bills. They literally sit there until somebody like checkout comes back to us and asks to redeem those tokens. So what Circle is trying to do is essentially digitize cash for the internet so that we can accelerate payments at the rate of speed of the internet. And so what that allows us to do is plug into traditional payment platforms that then service retail payments. We're a wholesale company, so we don't serve retail, but also to provide services for NGOs, for humanitarian aid and disaster relief, for example. So it's really kind of the evolution of money. Somebody gave a talk about CBDCs earlier, and while I didn't disagree with any of the use cases that they presented, that's really kind of 5 or 10 years out at best. And fully reserved fiat-backed stablecoins today are solving for all of those use cases. So I think we have come a long way from the genesis of stablecoins being used for primarily crypto capital markets activity and moving value around the world for that specific market to moving value around the world for all markets.
So which name would you like to use? Not stablecoin, but?
Well, I like tokenized cash. If you look at how regulators are determining what stablecoins are, within MiCA, they're called e-money tokens. In the UK, we're looking at bringing stablecoins into the regulatory perimeter, and they will also sit within an electronic money regulated perimeter. So I think it depends on the type of asset again. And so if you are issuing some kind of algorithmic, decentralized, stablecoin, I think we just need to look at how the mechanism, the stabilizing mechanism is working, and then kind of call it what it is.
Thank you a lot. Ewoud, actually, that was an excellent question. How do you make a business with stablecoins in your company?
Yeah, I think it's good to take an example of how you do processing today. So if you take credit card acquiring, I'll take you into a beautiful journey of payments right now. If you as an end consumer go to a website, you enter your card details, the merchant accepts that data, it goes to the processor via the network of Visa and MasterCard, it goes to the issuer, then the issuer says yes or no at that particular moment, they say yes, the transaction is accepted. We give the notification back to the merchant saying yes, it's accepted. And then the fun stuff happens. After 24 hours, we bundle all the transactions, we send it to the issuer sends the money to the schemes to us, and we do it to the merchant. That's 4 bank transfers.
And how long does all that take?
So in Brazil, this is called T+30. Yeah. So in certain countries, you as a merchant, you need to wait so long on your money. It's just unbelievable. And a lot of the limitations is a bank transfer. This is where we think stablecoin settlement will be a big opportunity, where we could potentially move from T+30 to T+0. And that's something I'm really excited about.
Amazing. According to you, Albrecht, do you think that stablecoin are only for B2B, or it can go to B2C also in the coming years?
Well, I'm sure they will gain more traction in B2C as well. If you look at, the penetration of very simple wallets such as MetaMask, where you can hold USDC and other stablecoins that are available in the market, there's no reason why people shouldn't be using them, to send money to each other instead of just sending it through a bank transfer. Even though instant payments are becoming a thing in the SEPA region, for example, you can send an instant transfer now. Still, by the fact that people are using more and more wallets and invest in digital assets and not just cryptocurrencies but also other types of tokens, there's no reason why they shouldn't be using stablecoins for simple day-to-day transfers where they transact with each other. I'm not sure what type of market share stablecoins might have in the future. I don't think it's going to be 100% because there are all kinds of payments use cases. But making a wild guess, I think 20, 30, 40% of the total payments volume is very likely to be transacted in stablecoins at some point over the next years.
Yeah, and let's not forget, sorry to step in, that we call it SEPA, and it's going to be instant SEPA. That's a great feature. But let's not forget that on a global level, still 1.2 billion people don't have access to a bank, that are unbanked or underbanked. So this is opening another gate of people that definitely have assets, but they're being classified by banks as, well, not being able to open an account. Let's put it nicely for the people that are in the room representing a bank. But it's important to understand, right? This is just opening a bigger group of people into the financial ecosystem of payments. So it's not only cannibalizing on what we see today. I actually think that the ecosystem will become a lot bigger because of this.
Yeah, so a couple follow-up points to that. I think when we think about people who are underbanked or unbanked, that's one end of the transaction, potentially. So if we have faster payments or, SEPA, those are national networks or regional networks. Typically, if you want to send money to somebody in Argentina, for example, I've got my friend here from Argentina in the front row, then you can't use faster payments for that. And then you're looking at a bank transfer or some other type of, fintech service, which again takes potentially 3-5 days to settle, and is very expensive comparatively. So I don't know if my pal from Stellar's in the room, but Stellar uses USDC as a settlement asset for a number of cross-border programs that they have in place. And one of them, I'm going to get it wrong, and he's going to correct me, I'm sure. It's either Argentina or Colombia. There is a pilot right now where the typical cost to send a cross-border peer-to-peer payment is like 5.6%. To send that with USDC using a Stellar wallet, it's 1.6%. So for that recipient who may or may not be banked, they can walk into any MoneyGram store anywhere in the world and cash that out. And that's incredibly powerful. That's happening today at scale. And then I think the other thing to note is since USDC was launched 5 years ago, it's responsible for settlement of somewhere around $8.6 trillion in transactions. That's on-chain transactions. So going back to your point, that's net new economic activity. That's not replacing or eating anyone's lunch.
Actually, that's very interesting what you said, because stablecoins do provide value for the customers, at least for banks. You don't see it every day, but actually you will see it on your fees in the end of the year. Congratulations. But the point of interest is that, okay, is it stable? Is it audited? What's your take, Sharma?
Well, I mean, Teana, you're probably more of an expert than me on this, but you have various audited mechanisms around how it's pegged, how digital assets are now accounted for, which fiat it's backed by, and obviously how you disclose those proof of reserves to the ecosystem, right? Because we want to instill trust. We're now enabling a new world of efficiency, and we want to enable trust. So I think the more transparent we are with mechanisms like this, the better it's going to be for everyone to grow. I think as well, and you touched on a really good point on the retail use case, and I'm going to hit the B2B use case as well, sorry, but the retail use case around international money movement is so important. And I'm an ex-banker. I worked at Citi for 10 years, so I'm very familiar with, as everyone on the panel here is as well, that you have agent banking networks across the world. And that use case is, yes, B2B, but importantly, remittance and payout services. So I think, the transparency of, as Ewoud mentioned, instantly settling, but also settling on the weekend, because the current system is broken not only on weekend settlements, but also local market clearing systems. Plus, it's not just one bank. It's about 4 or 5 different banks taking a clip of that transaction. So that saving hopefully passes through to the consumer, and that's why this is a great mechanism for B2B companies and fintechs that launch payment products and then look to provide more efficient solutions for their end customers. So I see remittance companies being able to deliver better savings, faster money movement. The other thing is what we'd like to encourage in the ecosystem is the efficiency of what's happening through B2B payments. So last year, and same with what Ewoud at Worldpay did, we launched stablecoin settlement with USDC, with Circle. And again, net new activity, I think we processed close to 2 to 4 billion instantly. Now, who's using that and why, right? And why does that matter to everyone here? Take, for example, an exchange or a merchant that we would service as a payments company. They're getting their fiat, as we mentioned, inefficiently. So it's really a treasury position here. The working capital it unlocks means that traditional organizations and for the bankers here aren't re-leveraging their credit line. They're able to unlock this with digital assets, which are received faster. Now we've seen companies for various reasons all of a sudden treasurers say, you know what, we're going to put 20% of our fiat settlement onto stablecoins because that allows me to reinvest my credit line back of 40, 50 million in a better solution. That's the flow and effect for retail, including the B2B efficiencies that we see. So I think net new plus savings is a very interesting factor. But to your question, the more transparent issuers, payment companies like we are around the use case and the proof of reserves will give the ecosystem a better sense of trust and integrity, which will help with adoption.
One quick thing I just want to add on that infrastructure piece. I, too, am an ex-transaction banker. And I think one of the critical elements about stablecoins today, especially in comparison to potentially some of the CBDC designs, are the open source infrastructure, the open source networks. That's really the game changer here. And so when you're looking through the lens of traditional legacy banking infrastructure, it is indeed aging, and it's difficult to bolt onto. So what stablecoins potentially do is provide access to, you know, a potentially new rail that can very easily converge with the traditional banking infrastructure. And it's constantly upgradable. It's constantly being iterated on because it's open source technology. And that's a materially different, like, game-changing shift that blockchain allows for.
I agree, especially Bahamas RIP, but I mean the Bohemian coin IslandPay and how they're using the government disbursements into the consumer's wallet. I think part of what we've got to do as well is allow optionality as a payments processor, but a great example of that is IslandPay taking stablecoins and central bank coins from the government and, you know, again, slightly bypassing local banking rails, but using blockchain tech to disperse that to a person that's receiving benefits. They can get it more instantly and then pick whether they want to off-ramp it to fiat. Again, people developing that app, because it's open source, they've been able to create an ecosystem play there where it's more transparent and cheaper for the end citizen. So use cases are phenomenal.
Yeah, and I think we're forgetting one really important topic here. We're not forgetting, I think we should articulate it a bit more. We are a payment processor which helps merchants accept payments wherever on a global level, allowing you as a merchant to do more revenue. That's it, bottom line. If you look at the Philippines is a great example. On the Philippines, you have like 75% of the people using a wallet, a digital wallet today, to do crypto transactions. I mean, this is a small country, of course, there's a lot of issues with the government over there. But let's say the adoption of this way of paying is picking up, and it will pick up, because if you look at Generation X, these guys, they already have these apps, they're already transacting with crypto. This is the next generation that will be wealthy. If you as a merchant, if you're not ready at that stage to accept payments also with crypto, then yeah, you're gonna fall behind, because yeah, some of those people that use these wallets at a certain moment will say, listen, I don't see the added value of using my MasterCard or my Visa. I'm gonna use these rails right now. And I think this is really important to emphasize. It's early days, it's definitely early days, because a lot of people still don't even see why we have blockchain. We were just chatting about it, that if you wanna explain to your friends what we do in this space, for us it makes sense, but for a lot of people it still doesn't. But it will pick up and it will become really big. And this is where we, as a PSP, want to be ready and make sure that if you are this merchant, you have the choice of the wide variety of payment methods, either that's in fiat or whether that's in crypto. That's not really important, as long as you have it. And that's really important to emphasize.
That's really interesting. Actually, Albrecht, do you see the same mind shift and the way, because we have seen the value, the hidden value actually replacing progressively, iteratively, the infrastructure which is aging for at least 40 years, 60 years now in the bank. But do we see a switch by the users, the new generations in your company? Do you see more younger people trying to dab into blockchain, dab into cryptos?
Definitely. I think in the past, the primary entry point into crypto was cryptocurrencies, and viewing them as an investment or even, an object of speculation. But as people gain experience with, if you want to talk about it broadly, digital assets, then of course they discover other use cases, and stablecoins are certainly one of these use cases. Also, one thing that I believe is quite important is that retail is driving a lot of the adoption. It's typically, financial institutions and corporates are typically not as quickly to adopt new technologies and using, new payment methods compared to retail. So I think, still up until a few months ago, a lot of the adoption of digital assets was simply driven by the fact that a lot of retail investors were buying cryptocurrencies. Of course, now we're, with the market crash, it's a bit of a, a more quiet situation, but I'm fairly confident that that is going to pick up again. And, institutions are following that. While stablecoins are primarily so far used in retail type payments and also in trading, I think a lot of the USDC and USDT trading volume is actually not driven by remittances, but actually still driven by trading on cryptocurrency exchanges. I think still it's a good starting point, and we will see more and more adoption of payments the way you have described it in actual remittance situations. One thing that I am still very interested about, and maybe also want to hear from the co-panelists here, how do you see the institutional adoption? Because one challenge that we always run into, or that banks primarily run into, is they say, well, we cannot hold an asset like USDT or USDC because there's still too much counterparty risk involved for us. Despite all of the audits and the disclosure of the backing with funds, if you look at the rating that an entity such as Circle together with the USDC consortium would get, is still not sufficient to transact in. So ideally, banks would want to transact in central bank money, which has virtually zero counterparty risk. So I'd be very curious to hear what the others think about, and how a path forward can be. Because at the same time, I don't think we're going to see a CBDC anytime soon. Just like you said, it's probably going to take another 5 or 10 years until we actually have that.
That's very interesting. And actually, we're lucky here again because we have Teana. Thanks to his position as VP with policies and strategies, what do you see recurrent adoption? And what do you think will be the impact of the new legislation called MiCA, supposed to be out in the coming weeks? For those who don't know, MiCA is the first iteration of legislation that will regulate, at least very libertarian way, the market of cryptocurrency. Though don't worry, NFT is not impacted. Continuing what you want. What's your takeaway, Teana?
Yeah, so I think that the institutional adoption question is almost interrelated with the legislative and regulatory frameworks that are coming. So to manage that counterparty risk, I think there needs to be, in addition to that, some global standards, and people have been talking about that a lot lately. So if we've got MiCA that classifies stablecoins as e-money tokens and puts in place things like capital buffers and requirements for the quality of the assets that are held in reserve and where those assets can be held, that makes sense, right? I'm not saying necessarily that those specific ones in MiCA make sense, but having a standard makes sense. And then you have other jurisdictions around the world that need to also figure out what those are. Now, ideally, would it be great if we had no regulatory fragmentation and everybody had the same standards? Potentially, although I think one thing we need to keep in mind with MiCA, especially as it relates to stablecoins, is this is a draft regime on paper that has not yet been implemented. And so there's a number of provisions, specifically as it relates to non-European denominated stablecoins, that could potentially become quite prohibitive for growth in Europe. If you're limiting the global flow of value around the world, and again, that optionality, people may choose to want to transact in US dollars for their own reason, right? And so there's some elements within MiCA that puts some caps and some barriers in the way around that. But kind of globally speaking, I think that when you look across all of the jurisdictions, one thing is very clear, that regulators and legislators in multiple countries following AML, the action that they're going to take is to figure out how to regulate stablecoins, which I then think gives a number of those institutions who aren't quite sure how to bring them into their payments, infrastructure and ecosystem, provides a lot more clarity and comfort that they're not going to, receive some kind of counterparty action or, trouble with correspondent banking, et cetera.
Thank you for mentioning those challenges. And the first one I faced when I had to go to Mika, it was about 350 pages. Please have a look. It's better than Agatha Christie's latest book. That said, Sharma.
That's the new version. The old version was 1,200 pages.
Absolutely. We know the geeks. And the point of interest, Sharma, according to you, what are the other challenges we have to face in the coming years before trying to make it broader usage, stablecoins? Because right now you say it's really B2B.
It is. It's very niche at the moment, although demand is large. So it's high value niche. Yeah, I saw that Mika reading, by the way. That was a bit of light reading that my girlfriend looked at me and went, nope, and just walked away. What are the challenges? I think continuing to demystify how we validate proof of reserves and the stability of the ecosystem. Teana touched on a good point. Getting regulators to have a better consensus globally is a very, very tough thing, and it's a utopian vision. But if we do have that in place, that will provide global clarity, and it will allow companies like Ewoud and Albrecht to distribute better end usage products that, as Teana mentioned as well, don't threaten our current business models and coexist. So I think better regulatory transparency, but more cohesion is also good. But again, you have varying regions, maturity of varying systems, so that is a massive challenge that I think those are the two key challenges. The other is just being able to educate the ecosystem. We're all very, I guess, unique in terms of, when you think about it, we're in payments, double-clicking on infrastructure, double-clicking on new optionalities. This is a very niche area, and there's not enough of us. So we need to be able to educate the ecosystem, provide, demystify, but also get out there and do things like this, and also attract broader industry. So it's not just about educating the Web3 ecosystem, but the Web2 that's coming in. So giving people at Netflix and Spotify, the treasurers there, just giving them the basics of what we think is our bread and butter today, but actually is quite new.
Very interesting, because as we all know, basically you have at least 4 different types of stablecoins. Based on cryptos, collateralized, all over collateralized, based on fiat, based on whatever it is. Great. Do you see any other challenges, Ewoud?
No, I think the question was answered pretty well. I think it's regulation is one, because if you see this mister in the US, and I won't mention his name before I get into any trouble, but he's doing the approach of being a very big hammer, trying to hit every nail he's seeing at this moment. And then I like the approach of Mika far better, because it's giving a framework to the industry to say, okay, this is what you can anticipate, and this is what will be next, instead of just totally cracking down on innovation. That's something I don't like. So that's one. And two, it's mass adoption. Very simple. People need to start using it. If you don't use it, then what's the added value? And sometimes you forget that when you're working in this industry 24/7 and you truly believe in it and you really see where the space is going, you go home. And my father is now visiting me here in Barcelona, and I'm explaining him what I'm doing. He's like, yeah, but why? I mean, I've got Ideal in the Netherlands, and I've got a bank account, and I've got my credit card. I'm okay. So mass adoption is also very important. And in some countries and certain jurisdictions, this will pick up a lot quicker because of the infrastructure that you have over there and the options you have in those countries that are very limited. And let's not talk about volatility of currencies and all that stuff. But I think those two factors are the biggest challenges today.
That's really interesting to remember that the inventor of Microsoft, when he talked to his best friend, Warren Buffett, said, hey, you know what, you should get the Microsoft computer. Say, why would I do that? Even today, 40 years later, he still doesn't have own one. Congratulations, you are able to make money without it. But who doesn't own a computer today? So actually, that's one of the big points. According to you, Albrecht, what is the future of adoption of stable coins?
I think we will see more and more use cases, first of all, right? So when we started with the trading use case, there was simply a big need for traders to be able to move money between exchanges in a very fast way and bypass the legacy banking system. And then, others discovered that they can actually use something very similar. And so, yeah, I think it's going to go into payments, into remittances, and eventually we're going to see institutional adoption where, even large corporates and large financial institutions will be transacting in stablecoins. At the same time, though, I think right now, when we talk about stablecoins, we kind of implicitly assume that it's something that is either US dollar based or other fiat currencies. And I personally believe we might come back to the idea that Facebook had with Diem or Libra, because fiat currencies are also not necessarily the ultimate solution to having a stable store of value. And so I think there's a good chance that we might come back to a stablecoin that is actually representing a basket of assets that has a very high likelihood to preserve value. As we're seeing right now, inflation is still very high, and so the stablecoins that are pegged to US dollars and other fiat currencies are actually not as stable as they should be, because at an inflation between 5 to 10%, depending on where in the world you look, that's not exactly stability. Stability would mean that it preserves purchasing power, and not just in the short term, but also in the long term. And I personally believe the only way to really be able to achieve that is not by pegging stablecoins to fiat currencies, but rather by pegging them to a basket of assets, again, that has a low volatility and that has a very high likelihood to preserve purchasing power. There might even be some smaller stablecoins that, took up this idea already today, but of course they will only become relevant if they reach a certain level of adoption. And I think right now USDC has a market cap of 40-50 billion, if I'm not mistaken, something in that ballpark. Even that is very small if you look at the payments volume, that is transacted through in the world. So I think once we're going to the trillions, and there will be, 3 or 4 dominating stablecoins that will not be fiat pegged, but will rather be represented by a basket of assets. I think this is kind of the end game. At the same time, I believe it's going to take, a few years until we actually get there.
I would love to hear your view on this, Teana.
Me too.
Well, I think I said it at the beginning. I think that the asset that you're using needs to be fit for purpose. And so, am I going to sit here and say that a basket collateralized stablecoin wouldn't work? Well, no, I don't know. One hasn't yet, but that does not mean that we won't see that happen. I think for the payments use case specifically, we transact in fiat currencies, and that's how payments are sent around the world. Now, if that evolves, and I think areas where that might evolve would be, kind of those niche use cases that may grow to be bigger, in gaming or the metaverse or, completely digitally native goods and services. So today we're talking about using a digitally native token to pay for real world goods and services. And I do think that there is a whole market that will, evolve that we can't see today, much like we didn't know we needed an iPhone, right? So I think it depends on ensuring that you're using the right asset for the right type of activity. And I agree that, fiat currencies are, a USDC will always be worth $1. Whatever that dollar is worth, and $1 should be worth $1. Now, the purchasing power for that dollar, does that remain, stable? Well, not necessarily, no. But that's not the use case you're trying to solve for when you walk into a Starbucks and you buy a coffee. You have X number of dollars, you're willing to spend them on a coffee, and you're receiving that value in that moment. So I think it just depends on the use case that you're trying to solve for.
That's an excellent opening, Sharma, because we have seen the position of CBDC, central bank digital currencies. We have seen that we have an explosion of stablecoins, matter of volumes. What do you think will be preferred in matter of market adoption? More stablecoins, more CBDC, and what are the key use cases you are foreseeing in the coming weeks?
Coming weeks. Interesting,
maybe
right?
later.
It changes in the coming hours.
You have 8 minutes. 8 minutes.
I think it just changed a second ago. Good question again. I think we've all touched on this as co-panelists. Optionality will be key. Use case, again, is driven by solving what for. So is it, for example, a DeFi protocol trying to solve for onboarding more users, And are they creating a stablecoin to de-risk the opportunities or the volatility in their ecosystem? Again, I think we really do have to be more fit for purpose, right? So if we're going to build, we got to solve for use cases versus also just putting it out there and seeing what open source has developed. I think given that we're all payments industry leaders here, being able to help channel our organizations into customer-centric issues is going to be key. But I think in terms of what's going to dominate what, Yves, to your question, I think we're too early to tell still. Like, we keep forgetting our industry is very nascent. There is so much growth to happen. So I think we'll be probably watching it more. It's a very diplomatic answer, but it's not a Gary answer. But I think we're going to have to watch it and see, but offer optionality. And then as people within the industry have, the clear taxonomy within our organizations to help drive and solve for what company A, company B, merchant A, or merchant B is trying to do.
I think one more thing, just to add to the asset or the basket of assets question. I think for me, what I would be concerned about is how then do we value what's in that basket? And so we could say, okay, well, we're going to put some gold in it. We're going to put some fiat currencies or a mix of those fiat currencies. We're going to put, I don't know, energy, whatever, bonds, I don't know, something, right? And I think value is always subjective, right? So there isn't one price for gold. Like, that moves around depending on the market on the day. Everything that we attach a value to, there is some level of subjectivity. So if you have a fiat-backed currency, you have one thing that you have to make sure maintains its value, and you have one thing that you need to demonstrate is actually there backing the asset. If you have a basket and you have 6 things, that seems a lot more complex to me, but I'm sure someone smarter than me could solve that.
I can confirm you, Valentine's Day was not that long ago. Love has a value, and the earrings have a price. And I can guarantee you the gold in it has a unique price. Expensive.
You want to end this panel with Valentine's Day and love?
Oh yeah, I love myself, don't worry.
Yourself.
That being said, I believe we have had a lot of interesting interventions, specifically regarding stablecoins. That was amazing to see. It's a nascent project altogether. We have plenty of approaches right now over the day. We have amazing companies working on the topic today. So if we have questions in the assembly, it is a perfect timing. Before perfect storm, call that lunch. Please.
Yes, hello guys. I just have a quick question regarding something I haven't heard. Thank you. Yeah, sorry. I haven't heard about ISO 20022. I know this is not the main topic, but I've been researching a bit about it. I'm not a financial advisor or anything, but I'm really passionate about this technology and this proposal, especially for SEPA payments. So I know we heard about SEPA and other things, so I just want to know, what do you think of ISO 20022? If it's gonna go on, and if it's gonna be relevant for crypto. Thank you.
There you go.
Sharma, non-consenting victim.
I have to say I'm not an expert on it. I think standardization and having the right governance parameters is what that brings, and I think it is important. We just have to make sure not to over-engineer it, because if we do, the impediment's going to slow down development of other assets, and having a payments business is fairly complex. I mean, you've got ledgers, multiple ledgers in different different technology formats and buckets of data going across. It's very important. It is very key. It creates and maintains integrity within our ecosystem as a governance standard. But I actually have to dig into a bit more to see how much of an impact it's going to be for our operational teams. But it's a good thing for the industry, I think.
Thank you.
It's a very good answer.
Thank you. Valentine's love.
I think the other thing I would just say is that that standard is also designed to handle payments in essentially a closed-loop infrastructure system. There are other ISO working groups that are looking at various forms of digital assets and identifying global standards for them. I always caution the community and regulators and lawmakers, everybody, to look through the lens of this, digitally nascent asset versus trying to apply existing standards or regulatory regimes onto something that might not necessarily be a neat fit, if that makes sense.
Teana, how's it going? Reed from Kraken. Just wondering, what sort of assurances do you have from governments, or do you have any assurances from governments that they're not just going to come in and say, hey, listen, this is our money, you're using our money, we want this, you shouldn't be doing this. Like, are you guys riding on anything from the government saying that this is okay, what you're doing?
Yeah, so I think if you look at, Mika is a great example of governments acknowledging that stablecoins specifically have a value and they should be regulated like other types of electronic money. And so today we have electronic money in Europe, and post-Mika we will have specifically electronic money tokens. And so that is not necessarily an anointment that they think it's a good thing, but that they see the value and the use case that exists. Japan, the UK, the same. I think, I knew you were going there. I was going to try and avoid that. So I think in light of what's happened over the last couple of weeks, the question is being driven, by some of the statements that the SEC has made, and maybe stablecoins are securities. We are very confident that USDC is not a security. It is regulated like other money transmission in the US, 48 states. And so the facts and circumstances, I'm not a lawyer, but that's what a lawyer would tell you, are different in every case. Do I think that the SEC is going to issue stablecoin companies a no action letter? No, I don't think that's going to happen. But what I do think is, and what I know for sure, that the priority last year, legislatively in the US, and certainly the top of the priority list this year, when we're looking at digital asset regulation broadly in the US, is stablecoins. And they're being referred to it as payment stablecoins. So there is this notion, there is this acceptance that that's what ultimately these assets are being used for. So I don't know if that gives you any comfort, but I think that's the direction of travel.
Hi. Regarding the basket of assets, do you guys think we can peg that economy back to usability of the resources used or being put on that basket, saying energy, houses? Do you think that economy can go back into usability for people, if it makes any sense?
Well, I think there are several ways to approach, a stablecoin that is backed by a basket of assets, and I personally would love to see competition in that, because there's no blueprint, so to speak, how to do that and which assets should be backing that. Should that be houses? Should that be energy? Should it be luxury goods or whatever, I think one narrative that you have is that these should be assets that have a fairly low volatility in their value, because otherwise you don't achieve the goal of having an actual stablecoin. But, I think there should be competition around what is the best combination of assets to, make up that basket.
So not energy.
No.
Whatever happens, thank you to every person here still remaining seated, and a lot of thank you. You can applaud the people who have been intervening regarding stablecoins. It was really amazing. I learned a lot, and please enjoy your lunch.
Thanks, guys.
Thank you.
Thank you.